First of all, we're going to start off with a disclaimer. Trading involves potential loss of risk of capital. It's not suitable for everyone, hopefully for you though. And many companies provide leverage, so just be aware that you can lose substantially more than your initial investment. The views, opinions, all the information that's contained in here is just solely for educational purposes. You know, we're not trying to encourage you to trade or invest. That really has to be your decision. And of course, you should carefully consider the risks, your financial situation, definitely your level of experience and your risk appetite. And of course, you should only risk capital you're prepared, but more importantly, can afford to lose. If you have any doubts whatsoever, seek independent financial advice before risking your capital. Okay, well, what a week it was last week. Lots going on. So we saw new highs and lows broken. Where do we start? The USD made a new high. The pound made a record low. Obviously, you know, that's part of it. It's dollar strength, but also pound weakness. And we'll get into that more. But, you know, it did turn the Bank of England from a buyer of gilts, from a seller to gilts to a buyer, just to try and protect pension funds and to also calm the market. But by the end of this month, they probably will turn seller of the gilts again. You know, remember, gilts are just government treasuries, but in the UK, as long as the conditions will allow for that. The concerns have been around the UK government high spending with energy caps and also promising tax cuts as well. And of course, that prompted investors to basically sell the pound down to all-time lows of just over 1.03. And that's because they questioned how the UK would be paying for all of these actions. You know, it's going to amount to probably about 200 billion. Treasuries continue to rally. That's the yields, of course, and stocks fell. Oil and gold rallied, but oil had a bit of a rangy week, to be honest with you, but they finished the week steady for sure. Central bank speakers continue to warm up on more rate hikes, and you know, they just can't stop talking about these at the moment. And you know, people have to take notice of these. You know, they're not going to stop anytime soon. But we'll come up to that anyway. So Eurozone inflation hit 10%. Prices are up across the board. Italy has a new female far right wing leader. So again, just wait to see what they come out with. You know, whether they're going to sort of try and follow EU guidelines or not. But again, you know, it's going to make their bonds very delicate as well, and open to again more pressure on the yields there. Ukraine continued their advance, and you know, resistance is weakening there from the Russians. Many Russians that have been called up by Putin would rather flee the country than actually go to fight. And then, of course, we've had this situation where Russia's tried to annex the Ukraine territories after so-called referendums. You know, the world is, well, the majority of the world has come out against that, obviously. Hurricane Ian in the US caused probably around about $65 billion worth of damage. The hurricane, then it was again. Mainly around the sort of Florida area. Now, UK GDP was positive, just 0.02%. And as I mentioned before, Bank of England had to reverse from a seller of gilts where they're trying to unwind the balance sheet to a buyer. They bought about £1 billion worth, but they're prepared to buy a lot more if they need to help protect pension funds. China data improved slightly. House market remains under pressure, obviously, with all these rate hikes that are going on. And in the US, the PCE, which is very, very keenly monitored by the Fed, dropped from 6.4 to 6.2. It's become sticky around those sort of levels at the moment, I would say, for the last few months. And, with Q3 just ended, it's going to be really interesting to see that GDP data is released from countries looking at Q3. So the data this week is a little bit light, except for manufacturing and, of course, NFP on Friday. The latter is looking at probably round about 200,000 jobs created. I expect earnings to increase again. Watch for the hours worked. Those areas I'm more focused on than the actual job numbers these days, just because of where we are there. And there's not much else to come out, to be honest with you. It's PMI, manufacturing across the board. The EU has retail sales as well, so that may be worth taking an extra look at. And if going into Asia, they've got trade data. They've also got inflation data along with their PMI. So there's not much to say about this week, but obviously it's going to all be this build up towards the end of the week for the NFP. However, there are lots of Fed speakers and other central bank speakers this week. So, of course, that is something to just keep an eye out and an ear out for, because, if they keep continuing to emphasize these rate hikes, hopefully everyone is taking note of that, because there's more pain to come for sure. I suppose on the good side is the fact that if you've got extra cash, you're actually going to earn some interest on it. And wow, it's been over a decade since we could say that. Now, moving on to the macro outlook, what do we expect? Inflation, of course, it's still there. It's not going away anytime soon. It seems to be getting stickier and stickier. Not so much a surprise, but you would expect it to start coming down. You would expect consumers to start, being more reserved with their buying and buying more of what they need rather than what they want. But inflation's not coming down anytime soon, which again is making it more difficult for the central banks. Stagflation is around. Stagflation is inflation without growth, and expect to see more of that, I would say. And then leading on to that, obviously, is the recession. Now, I personally believe that the central banks will drive the economies into recession, create an economic reset, if you like. And the reason for that is because it's the only way they stand a chance of getting control of inflation again. So again, just bear in mind, they're going to put rates up more. And not only that, but into next year, not just short term, but into next year, I believe that they will keep rates up higher, because they're going to want to see 3 to 6 months at least of getting that inflation down, and it's sticking around their desired 2% level. And until it does that, I would not expect to see rates cut. Obviously, if something major happens with Russia or COVID, then yeah, potential's there. But otherwise, probably not. Supply chain issues are there, but not as deeply. Again, all eyes are on China with the lockdowns. At one stage, there was over 20 cities, but I think they're being slowly released now. But they do have this zero COVID policy. Russia's invasion of Ukraine, as I mentioned, is not going to plan. Ukraine are fighting back. They've regained ground, which is great. And you read the reports, some of the Russian soldiers are even just retreating. They just don't want to fight. And of course, as I say, Putin tried to call up another 300,000, which when you think about that, he's admitting he's not doing well in the war if he's calling up all these extra 300,000 to go and fight. But of course, a lot would rather leave the country than fight. So there's, flights are actually at a massive premium where people are trying to get out of the country at the moment. Moving on to energy, it's sort of it's become a little bit more stable, but of course, as we know, there was problems with the pipeline from Russia into Germany. Again, what caused that? Was it natural or was it sabotage? Lots and lots of conjecture on that. And oil sort of stayed around a range, not going too far either way. Gas prices did surge again on that though. Now food inflation, it has settled. Now inflation for me is if you look at PPI, I would expect that to start to come down because the cost of raw materials has come down. Energy, oil and gas and everything. Okay, they're still high, but they're well off their all-time highs that we've seen in recent months. So you would expect to see PPI coming down because producers are paying less. However, I think what they're doing is they're holding on to those profits. They was already getting a record 15% in the last decade or so of revenue profits for their bottom line. But I think that the greed factors come into them at the moment, and they're just not passing on any savings to us, the consumer. So I think you're going to see PPI coming down, but you're going to see CPI staying up. And I think for me, they're trying to maximise their profits before they see that potential destruction of demand coming in from the recession and all these rate hikes, which is going to force them to drop prices and depending on the sector they're in, some of them probably quite aggressively, others less so. And of course, we're still seeing that lack of workers, as I say almost every week, just surprises me, but it is. And you'd think at the moment, with the way the value of everything's coming down, apart from obviously inflation, that, asset-wise I'm talking now, that people would actually be looking for work. They would be keen to get into work and establish themselves before these jobs suddenly evaporate. But that lack of workers is keeping earnings pressure around. Trading tip of the week, volatility. We're seeing it day in, day out if you're trading. And just remember, high volatility, the higher the volatility, just reduce your trading size down. And then that allows for you to have a wider stop, but without increasing the potential loss. And that last bit's really important, without increasing the potential loss. So you can have your stop further away, but you've got to reduce your size so that you keep those losses under control. And of course, you've got to make sure that if you're doing that, that then you can get at least twice what your potential loss is going to be in profit. You can't ask too much from the market. Well, at the moment, you almost can, I would say, but you shouldn't. You've got to be a little bit more cautious, a little bit more sensible about this. And so, but you've got to keep that risk-reward ratio. My minimum is 2 to 1. I'm looking for more, and often I'll get a lot more than that. But that's my minimum. If I can't see that I can get at least twice as much profit as my potential loss, I just don't accept the trade. Stop losses, keep them in the market. These markets are very, very active, just moving so fast. Yeah, sure, you're going to get stopped out at times, but there's going to be times when it bounces and you go, oh God, why did I put that stop loss? Other times you're just going to see it keep going and going and going, and you're going to be thankful you had that stop loss in. So it balances itself out over time, and probably more on helping you rather than not helping you. So just remember, keep those stop losses in the market. And of course, the other side of that is when you've got a good profit in that trade, protect some of it, lock it in. Again, depending what size you've got. If you've got enough size on, just take it off piecemeal. Sell a little bit, 10%, another 10%, another 10%, whatever pace you want to go at. Just make sure you lock some in, because you never know when these markets are going to turn at the moment. But of course, if you do it gradually, then it gives you a chance to try and again maximise those profits and get a really great average from the trade. You know, we need the winning trades to pay for the losing ones, for sure, and we all get those as well. And of course, you've got to know when to stop on the day. Now, you know, for me, if I have 3 losing trades consecutively, which is unusual, I stop, I reassess, work out what's going wrong. If I can't work it out, I don't trade anymore that day. If I can work it out, I'll have a small trade, but it doesn't mean that I'm going to go in. And going back to locking profits, I'll keep pushing my luck until I have a losing trade. Once I've got past all of the type of revenue I'm comfortable with. Same as I teach all my guys, you know, through the courses, keep going, you know, push your luck, don't risk too much, but push your luck a little bit until you have that one losing trade, and then that's it, you're done for the day. Your luck run out, stop. And hopefully, you know, you've ended up with a lot more on the day than you would have expected. Never say to yourself, oh, I'll just have one more after that first loss, because goodbye all your profits. So, you know, just accept it, just appreciate it, and then tomorrow's another day. Okay, so now we're going to move on to the analysis. As usual, just selected a few products. To be honest, they're mainly the ones that I trade and look at, so that's why I use them. We're always happy to look at other things if you would like to contact us, and if it's possible. Just a reminder, black numbers on the right hand axis are support resistance levels, and they will be from trend lines. Brown numbers are breakout levels, so if it gets through there, the expectations is it will continue. Claret numbers, sort of the ready numbers, they're the horizontal ones, and they're just based on 2 or 3 tops or bottom, or where I feel that there's a bit of congestion which is going to create support or resistance. Fibonacci colours are on there as well, on 2 of these today. So, you know, I've tried to put these on to give you a little bit of insight and all that. So, you know, don't be lazy. You know, I'm doing some for you, but put them on yourself. You know, once you've established that move and it starts to go in the opposite direction, that's when you can get your Fibonacci's on, because what you're looking for is, you know, first of all, is it a retracement or is it a reversal? It remains a retracement until it goes through the golden ratio. And then the potential is it's not a retracement anymore. It is a reversal. So that becomes very important, and especially when we're looking at the stock markets and the way they're coming down. You know, they're still well up on the year or the last couple of years since COVID hit, but you know, we've just got to be mindful that they are trickling down, sometimes faster than others, but you know, in that bear trend. So how far will they reverse? So here's the DOW Daily with the Fibonacci. I've only put it on the first couple just to give you a little bit of a clue. And then what I've done is I've actually gone over those levels with the horizontal lines. And I've done that just to make it clearer to you. So for the fibs, so at the moment, because it's broken through F1, that effectively becomes a resistance level now for the moment, and that is at 29,670. And then F2 is a support, which is 27,474. And below that, we've got F3, the golden ratio, which is 25,248. Sure, it's a long way away at the moment, but it can get there. So, and just remember, you know, the low was created in March in 2020 when this big sell-off came. So I've used that against the highest prices, and my system automatically gives me the Fibonacci calculations from that. Okay, so here's the daily without the fibs on. Managed to get one support, one resistance on there, but as you can see, it is that downtrend that we've got at the moment, and therefore I've got 31,593 as resistance, 28,762 as support, and then drilling into the 30-minute, again some more levels. So resistance at 29,291 and 29,046. With support at 28,761. So you can see those lines. You can see some are trends. A couple of them are horizontal. Moving on to the S&P. Again, I've added the Fibonacci for this one. You know, we are through that first, the F1 level on the Fibonacci's. So it does become a resistance. So that's at 38.01. F2 lower down in the market at 34.93. And below that F3, the golden ratio at 31.80. Again, we've got that downtrend. So here we're seeing multiple levels of resistance. One quite high up, but you know, you just never know with these markets if they're ever going to have a crazy move one way or the other, which is why I sort of put all the dailies in to go with the 30 minutes and such. So resistance 4,044, then 38.45, and the nearest one 37.33. Support at 35.94. On the 30-minute, not too much on the resistances. I've put 2 or 3 levels in. Again, just really from those vertical level, horizontal levels, it's difficult to get sort of any decent trend line on a 30-minute. So 37.11, 36.32, and 36.12 I see as resistance at the moment, and support at 35.92. Now, you know, one thing to bear in mind is I do this analysis on a Sunday evening before the markets reopen, and that's allow us to get it posted nice and early for you guys on the Monday morning. So, you know, yeah, just bear that in mind. That's why I sort of go, oh, he's put that level on there, but that's already been broken. But that's why, because I've already done it, but it's before the markets reopen. Okay, so moving on to Nasdaq. Again, we've got that nice downtrend line there. Now, you know, if you need the fibs, you can put them on. I'm sure your system will have that anyway. If there's a problem, let us know, and we'll try and add more. And, you know, they are important to add on. I just haven't bothered to put them on every single one because then it gets a little bit confusing for people that are new to trading. So here I've got a nice downtrend. I've put a couple of other resistance levels in there that I can see from, you know, pretty much from lows that have now turned around and going from support to resistance. So on the daily, I've got resistance at 12,306, 12,176, and 11,612, with support just over 11,000 at 11,022. On the 30-minute, I can see resistance at 11,205 and 11,082, and support at 11,020. So the support on the daily and on the 30-minute, pretty much the same levels there for the Nasdaq. Moving on to the Russell. Remember, these are the small and mid-cap companies. So a couple of sell levels above, and then we've got a downtrend based on the daily at the moment as well, as we have with all of the, obviously, the equity indices. So resistance 1866, 1802, and 1716, with support at 1639. And bringing in the 30-minute, resistance at 1689 and support at 1667. Here we go with currencies. So the pound against the dollar. The dollar strengthened and strengthened, and the pound weakened and weakened at the beginning of the week, and then it was all turned around, and then the dollar started to weaken more than the pound gaining. You know, there has been some expectations that the government might sort of dial back some of their intentions to cut rates to go with the power caps. Personally, I don't see it. You know, it's a new government, well, a new head of government everyone's got their new positions within that government. I can't see her starting to backtrack so quickly. It's really, really not going to look good for her. But then on the other side, you know, there's a lot of her party that are unhappy with what she's done. But they can only blame themselves because they elected her, which is more than what we did. Okay, so on the daily for the pound against the dollar, I see resistance at 112.52 and support at 103.17. Again, very close to its all-time low. And on the 30-minute, I've got resistance at 111.80. I've got support at 110.34 and 108.96. Now, you know, it's going to be a volatile week still. Okay, there's not much data out, but sometimes, you know, investors, traders will try and take advantage of the fact that there's not too much to influence the market and do it themselves. And of course, you know, just keep an eye on what the government says this week, and the Bank of England as well, and the Fed, because, you know, between them, they're going to effectively determine which way the pound goes and which way the dollar goes. You know, the dollar's had such massive strength over the last 2.5, 3 years that, you know, there hasn't been much profit taken on it, to be honest with you. So, you know, you've got to expect to see a little bit, especially when it gets to record highs against other pairs going to record lows, obviously. So, you know, it doesn't mean that it's a complete reversal. It's just maybe a correction, end of month, end of quarter profit taking. So again, you know, don't get to, just be that little bit cautious about buying dips on some of these currencies against the dollar. Here we are with the Euro Daily, and you know, it's good if if you're trading the dollar or you're trading pairs like this to have at least 3 pairs listed. And that way, at least you can see if it's the dollar influence or it's the paired currency that's having the move. It's much easier to see that. Or, of course, just watch the Dixie, which is the dollar basket as well, the dollar index. And, of course, the euro traded below 0.96 against dollar at one stage. I see resistance at the moment at 1.0077 and also at 99.12. 0.9912, that is obviously, and support at 0.9574. On the 30-minute, I've got more resistance levels at 98.73 and 0.9862. Support level 0.9765, 0.9739, and 0.9592. You know, just remember there's lots of central bank speakers this week, including the Fed. So, you know, you will see some volatility, even if there's not much data out. The moment they start to speak and confirm what they're looking for, it will have some impact on the markets. Okay, moving on to Bitcoin. You know, when you look at all these moves in the markets, everyone used to say crypto and Bitcoin was the most volatile thing in the world, and yeah, for a while it was. But when you look at these ranges that it's been in, okay, it's, you know, it's $2,000, $3,000, $5,000, but it is going sideways. It's ranging. So, you know, it's the rest of the markets that have become a bit more erratic, shall we say. So on the daily, based on that, I just keep this in here as a reminder. This 27,440 as a breakout level. You know, it's nowhere near there, but you know, it can become volatile at times. Below that, I've got resistance at 25,991, and below that at 20,550, with support at 18,105. On the 30-minute, I see resistance at 20,355, and below that at 19,685, which is, you know, where it got up to on Friday. So You know, let's see how it opens tomorrow. Remember, I always focus on the futures markets when I do all of this. And support, so yeah, so support on below that we've got 19,272 and 18,535. So again, emphasizing all this analysis is based on the futures contract. Okay, Bitcoin versus Nasdaq Daily. I mean, look at it. You know, correlation was there, tracking each other, and now that correlation just seems to have changed with this aggressive sell-off of the stocks, while Bitcoin's just been consolidating. You know, let's see how it goes next week. You know, hopefully Bitcoin stays up here because it'd be great. You know, I'm a fan of crypto, digital assets, you know, going into NFTs, metaverse, etc., etc. Yeah, so that's for another day. But yeah, I'm a big fan and invested a lot in those. Now, with the stock market coming down like that and crypto going sideways, you know, we are seeing a little bit of a break in that correlation. It doesn't mean it's going to stay like that, but again, you know, just don't get quite so influenced by them at the moment for what Nasdaq's doing to your expectations of Bitcoin, which demonstrated in that chart. Okay, moving on to commodities. So with gold, you know, we saw a little bit of dollar weakness towards the end of the week, and that added to investors exiting risk, and they also saw gold giving it a positive week. You know, it stood a long way off from the highs. You know, I mean, it was over 2070, almost 2080 at one stage, and here it is below 1700 still. And you know, it had reasonable range last week. You know, 1620s up to 1680s. And so when we look at it for levels at the moment, I've got 1705, and then I've got that downtrend which has become pivotal now. So it's 1659, but you know, if the market's above, it's going to be a support. If it's below, then it's going to become a resistance again. So it's going to be an interesting line to see how that develops this week. And the further support at 1607. Moving on to the 30 minutes, some more levels coming in there. So identified a couple of trend lines and a couple of some support lines on the way down. So I've got 1676 and 1674 as resistances, close together, but two completely different lines I've got in there. And for support at 1668, 1649 and 1623. Last but not least, WTI. Again, you know, oil it fluctuated during the week, $7, which you know sounds a lot, but probably for oil it's not actually that much at the moment. The low was the hit when it hit down into the 76s, and it almost rallied all the way up to 83. So, yeah, that range is still there. It's is it fair value? You know, it's really going to depend what happens with Russia. It's going to depend what happens with weather, tornadoes out in the US. It's going to depend on what happens with this recession. How quickly is it going to arrive, and how deep is it going to be? You know, is supply going to be too much, or is demand going to manage to hold up? And you know, it's a big question for oil, really. I trade a lot of oil, but you know, I've got in my mind what I want to do. But you know, you get to these sort of neutral levels in the market where I guess you'd call it fair value. So as I mentioned, so resistance is 90.35, resistance also at 88.26, and so a little bit higher up, and then support back down at 76.87. And then the 30-minute where I can see resistance at 82.24 and also at 81.22, and support at 78.06 and 76.49. So that's the analysis, and as usual, obviously we'd like to promote ourselves and tempt you to join us on some of these other areas that can help you either to get into trading or help you to improve your trading. You know, I've been trading almost 50 years, so I've got a lot of knowledge and trading skills to pass on. We do a daily newsletter, and of course, you know, you've got this weekly one, which is great, but things do change during the week. So we've got the daily newsletter, which is delivered directly to your inbox each morning, and that includes global news, then daily chart levels, and fresh pivot points as well. And there's a link to that. And then below that, we've got the workshops, one-day workshops, just to help you tighten up on a certain area that you may need some help with, or a trading for beginners to get you into it. Courses, 1 week courses, and you know, they're really great to give you strong, quick foundations. You know, maybe you've only got 1 week to spare. If you've got more, then come to our masterclass. That's 4 weeks of guided learning, but you can spread them out. You don't have to do them all in one go. And of course, if you pass the exam at the end of that, it's an accredited course, and a further challenge that we set, we'll actually happily offer you a job working for Symax Prop Desk, our trading prop desk, where you can trade any asset class. We teach and train on every asset class because we're trading them all. And then beyond that, there's trader mentoring. So whether it's for an hour, half a day, or a full day, or month on month, I provide a lot of trader mentoring to help people continually reach that next level that they want to get to. We consult to lots of companies. A lot of that is around hedging. We also provide trader education, obviously to individuals, but also to exchanges, brokers, and even their employees. Now, to contact us, very simple, info@symaxfintech.com, or if you've got a question around trading that you would like to ask me direct, then feel free just to reach out, chris.tubby@symax-int.com. I'd love to hear from you. Questions, suggestions, anything at all. Always around to try and help as much as possible. Have a great week. Just remember NFP on Friday. Now, with NFP on Friday, you know, for me, I always look more at the other data than I do at the actual NFP number these days. So I'm more interested in the earnings. I'm more interested in the hours worked and such like. You know, that number with you know, US unemployment 3.7%, you know, it's be expected to stay around there. That, you know, the other data becomes more important because it can fluctuate more. And listen, have a great fourth quarter, and obviously a great week next week, and look forward to seeing you in a week's time. Thanks for now. Best of luck. Goodbye.